Welcome, my name is Vincent Luce with Forex Trading Institute. Please take a couple minutes and go over the following risk disclosure. Strategy number 4, Denver Rocks Part 2. Each year, thousands of skiers flock to the Rocky Mountains of Colorado just outside of Denver. Skillfully negotiating through feet of powder, they enjoy the sensation of gliding down the side of a mountain. With the Denver Rocks Part 2 strategy, you will learn when to jump onto a trade and ride it for a solid profit. By following the simple rules, you will remove a lot of the guesswork sometimes associated with long-term trades. In addition, signals are generated on a daily basis and only require for you to check them once a day. Now, Denver Rocks Part 2, it works with all major pairs. We're going to use this on a daily time frame. The Williams Accelerator Indicator. We're also going to use the 200 exponential moving average. We're going to use the stochastics with the parameters of 10, 3, 3. Our profit target, take profit number 1 is going to be 75 pips. Take profit number 2 is going to be 150 pips or the next line of support and resistance. The stop loss is 200 pips in most cases, and the signal frequency is low since we're using a daily time frame. Now we're going to load a daily chart on your platform. We're going to add the Williams Accelerator. We're going to add the 200 exponential moving average, and we're going to add stochastics. Now, rules for entering long a trade or buying, we're going to enter long when the following conditions are met. The candle of the trading day has recently closed. The accelerator shows a second green bar above the midline. The stochastics is upward or has recently crossed up, and it may be overbought. The close of the candle must be above the 200 exponential moving average. Price is breaking above a recent range. The candle on the signal must be green. If it is red, you got to wait for a candle to close above the red. Take profit number 1 is 75 pips. When T1 is hit, you close half of your position and move your stop to the entry point. T2, you're going to go for 150 pips or the next line of support and resistance. Our initial stop loss is 200 pips on most trades. Now, rules for entering short or selling. Short trades are entered when the following conditions are met. The candle of the trading day has recently closed. The accelerator indicator shows a second green bar below the midline. Stochastics is in a downward trend or has recently crossed down. It may be oversold. Price is currently breaking through a recent range. The candle signal must be red or bearish. If it is green or bullish, wait for the red candle to close below the green. Now, take profit number 1 is 75 pips. When T1 is hit, you close half of your trade and move your stop loss to the entry. And T2, you're going to allow it to run 150 pips or the next line of support and resistance. And your initial stop loss is going to be 200 pips for most trades. Now, Denver Rocks Part 2 is built on a premise of trading on a trend to find a trend. So be sure to apply common trend trading principles. Watch for recent lows and highs. Avoid taking trades on a doji or opposite direction candles. Accelerator flips are preferred to renew trends, and look for stochastics for confirmation. Avoid taking trades near the 200 exponential moving average. So let's go, and I'm going to show you how to apply this strategy. This is one of my favorite strategies, along with number 1. Now let's go here and let's look at an example here. Okay, and the difference between 1 and 2 is that we need 2 candles. For example, here we have 2 candles that are above, okay, this moving 200 moving average. So we have to add the accelerator, the stochastics, and the moving average. And now we just don't need a flip like on Denver Rocks 1. We need 2 green bars, and this is a small one. I wouldn't consider that one a bar. I would wait for 2 clear green bars above the midline. And we want a bullish candle. In this example, it wasn't bullish. Okay, so I would wait for the next candle. The stochastics is pointing up. And this one doesn't matter if the stochastics is oversold as long as it's pointing up. And here we had our 1-2 candles, and we had a bullish candle, so we would have taken this trade. And as you can see, we easily got our profit target. As you can see here, we made our 75 pips on the first lot, and we made almost 700 pips on the second lot. Okay, now let's look at another currency here. Let's look at the Japanese yen, and we'll go to the daily time frame. Okay, we right click here and we go to properties, and I like putting candlesticks, take out the grid, take out the auto scroll. So let's go through the whole procedure. We add our accelerator. Okay, then we're gonna add our stochastics. And 25. Okay, and we're gonna put here 1033, and we're gonna go to we're gonna add our indicator here. We're gonna add the moving average, and we're gonna add a 200 exponential moving average. Okay, and let's look at some trading signals. Let's look at some short signals. So we've seen some buy signals. Let's look at some shorting signals. That's why I chose this currency. Okay, let's go back here. All right. Okay, so let's look here. Okay, so we're below the 200 moving average. Now we're looking for stochastics to be rolling down. Okay, so we see here, and we want to look for 2 red bars. Okay, so we got 1, 2. Okay, red bars below the midline. And we got a bearish candle. So this would have been our entry point. We put our stop loss 200 pips above, and we're going to let this ride. We're going to put half our position to take profit at 75 pips, the second to take profit at the recent support. So let's see what happened. And the market went sideways, and then it dropped, and we would have easily made our 75 pips. We could see here, if we entered on this candle, we easily made our 75 pips, and it was 150, almost in this case, almost 160 pips. So we would have taken our both profits. Now here would have given us another signal. Okay, and let's just look at other signals here. When we get a red, this is Denver Rocks 1. Let's go to the end. I think we're about to get a signal right now. Yep. So for example, now we just got 2 red. Okay. The stochastics is pointing down, and we're about to break that recent range here. So the only thing we don't like here is that we have a doji. So we might want to wait for another candle confirmation to take this trade short. Okay, so we had a nice example there, and we had a Denver Rocks 1 prior to that one. Okay, here we had another Denver Rocks 2. We want to make sure it came before a recent pullback. Okay, and then the market gave us 1, 2 bars. This was a bullish, so we wait for the next one. We had the bearish. The only thing we didn't have stochastics pointing downward, even though it ended up having a profitable trade. We would have waited to start pointing down in order to get into that trade. So this is a very effective strategy. You don't get a lot of signals because remember you need the stochastics, you need a recent pullback, and this is on a daily time frame, so you might have to wait a month and a half to get a strategy, but when you get it, you get a nice run, and it's very profitable trade. Okay, so my name is Vincent Luz with Forex Trading Institute, and I'll see you in the next strategy.